Do interest rates have you squashed? Do you feel like you've been priced out of the market yet again, even though competition's down? We have a trick for you to hopefully get you into your next home quickly. If you're like most buyers, you've been really frustrated over the last couple of years trying to get a house. First, it was ridiculous amounts of competition, not being able to get the home you really wanted. Then home prices soar through the roof. Now that competition's a little bit less, the interest rates are out of control and you've been priced out yet again. The beauty is we can now use some lending products that we haven't been able to use over the last couple of years because we haven't needed them. Overall, this is called a buy down. And there are a couple different ways you can use a buy down. We're going to talk today about the 3-2-1 buy down. Essentially, what this does is that it buys down your rate for a period of 3 years. The first year, you're buying down 3%. The second year, 2%, and the third year, 1%. So let's say you're qualifying right now for a mortgage at 6.5%. You would essentially buy down the rate to 3.5% in the first year, 4.5% in the second year, and 5.5% in the third year. At that point, it would then move on at the 6.5% market rate. At any time along the way, you are welcome to refinance if the interest rates drop down to a more reasonable number that you're comfortable with and lock yourself in at a fixed rate. While we can't predict the future, we do suspect that over the next several years, the interest rates will start to come down a little bit more. So I know what you're asking. This sounds way too good to be true. How much is this going to cost me? Essentially, the cost is just the difference between the amount you would be paying at the higher mortgage payment and the difference between that and the lower payments you'd be making at the lower interest rates. But they would take that difference as one lump payment at the closing table. For simplicity reasons, let's say you're taking out a loan for $100,000. Over the course of the 3 years of the buy down, you would be saving about $4,500 in principal and interest. Now this is rounded just for simplicity's sake. This $4,500 would then be due at the closing table as one payment. So you've got to be wondering, who's paying for all of this? If I've got to pay $4,500 up front, how is that saving me any money? The great news is in this market right now, sellers are seeing their homes sit a little bit longer and they're getting a little antsy about whether or not it's going to sell. So rather than doing a price reduction, which is typical of what people would normally do, which absolutely does nothing for the affordability for the buyer, they're offering to pay towards that buy down for the buyer. This helps the buyer to lower their monthly payment and therefore make the house far more affordable than any price reduction would ever do. So let's review some of the benefits of the 3-2-1 buy down, or pretty much any buy down product. The first one being obviously the lower interest rates. This helps you save so much money on those monthly payments and makes it more affordable for you to get into those homes. If we have an example of a $500,000 loan and a market rate of 6.5%, in that first year of the buy down, getting it down to 3.5%, you'd have a monthly savings about $915 a month. That is huge and makes the home so much more affordable for the buyer. The second one is that refinancing is likely. We don't have a crystal ball, we don't know what's happening in the near future, but we can pretty much assume that interest rates will eventually come back down. At any point along the way, you're able to refinance this lending product and you're able to get into that fixed lower rate as soon as it becomes available. The third benefit is that these funds are actually put into an escrow account. So when you are at the closing table, that money is deposited into an account where it is removed every month to make your payments. Now let's say you do refinance before the 3 years is up. Anything that is left in that escrow account actually gets refunded to you as the buyer and is applied to the principal of the loan. So it is just a wonderful savings all around. So the greatest benefit of all is, again, that sellers are paying. In this market right now, where buyers are a little bit more in control than they have been, sellers are willing to do a little bit more of what it needs to take place in order to get their home sold. So they're able to sell their home, You as the buyer are able to get a great rate, and it's just a win-win all around. If you've been looking to buy a home for quite some time but just haven't been able to make it work, reach out to us. We're not mortgage experts. We're just simply trying to let you know about a wonderful opportunity that will make it easier for you to get into your home. We have wonderful lenders that we have worked with that can offer these products to you and can go more in detail about your specific situation and if it will work for you. But please reach out to us. We want to help. We want to make sure that you can get into your home that you so desperately want, and we are here for you. If you found this video helpful, give us a thumbs up, subscribe to our YouTube channel, follow us on Instagram. We have plenty of content that we deliver to all of our clients and potential clients to help you be informed in this ever-changing market.